Welcome to Spin Out.
I'm Dave,
And I'm Winner.
and we're here to demystify venture
Minimize FOMO.
and discuss the relationships between GPs and LPs. Today, we're kicking off a new mini-series. Winner, why don't you tell the people what we're going to be talking about?
Sure. We're going to turn our attention in this mini series to fundraising. We're going to break it into 5 parts. And the context here, the background here for why we think this is an important mini series is that Dave and I have cumulatively seen hundreds, maybe even thousands of funds launch in the last decade. And there's, in our belief, an order of operations to launching a fund 1, launching a fund 2. It doesn't matter the number, but there's a process that we believe simplifies launching the fund, puts you in the best position to potentially fundraise for that fund, and importantly as well, helps you save on costs.
As the CFO, from my point of view, it's really important that, as Winner said, we save some money on costs, but we also preserve optionality. Like, you don't want to lock yourself into a contract or making payments or any of those kind of things until you start answering some of these key questions. So we're going to give you both sides, how to wow LPs and how to make sure you don't bankrupt yourself in the process.
Today's episode will be on just how to start fundraising, kind of big picture. And we're going to cover, market research, right? Figuring out, is this a product, worth fundraising for, the pre-launch phase, and then the launch phase. And then the following 4 weeks, we're going to dive deeper into each of those phases and make sure you, the listeners, have a much better understanding of the order of operations for launching a venture fund.
And we'll cover things like the main parts of the operational process, getting your legal and bank and other tools set up. We'll talk about how to build out your data room, what you initially need to get started. We'll talk in depth about track records. And then ultimately, once you get to that first close, how to onboard LPs and give them a great experience.
The goal here is to make it simple, to make it accessible, and we're really excited to kick it off today.
All right, so Winner, let me ask you the first question. So someone gets to the point where they've decided that the best use of their next 10 years of their life is to raise a venture fund. What do you recommend is the first thing they do once they decide to start a fund?
This is the debate, right? Like, there is a moment in time, there is a conscious decision that every fund manager has to make of, to be a fund or not to be a fund. And so what you don't want to do is to be a fund too early, right? If you're not quite ready or you haven't fully thought it through, or, you haven't set the right expectations for yourself. So this is really a personal exercise, right? It's a personal decision. Yes, you have experience, yes, you have kind of wins on your track record. Yes, you have all these other great things going for you, but it's really a personal decision to be a fund manager. And so I think the way we're going to kind of approach it is in this first phase, right? The 3 phases are market research, pre-launch, and launch. In this first phase of market research, you're trying to figure out, like, one, make the decision, but you're trying to figure out kind of what is it as a product, as a fund product that you are trying to build and ultimately sell to LPs, right? LPs are your partners, but ultimately you're building a product and you're selling that product just like any other business. And so there's a concept that many people, I'm sure, are familiar with. A lot of people call it like the lean startup concept, right? It's like, how do you build kind of a prototype of what you may sell to LPs? And it doesn't happen on day one here. Like, the key point is this whole process will be iterative. And to Dave's point earlier, like, you're trying to preserve option value throughout this process, but you do have to have something that LPs or friends initially in this market research phase can respond to.
I was going to say, I think it's really important that you understand all aspects of that, right? So the types of companies you're going to want to invest in, that's a segment of market research, but also the types of LPs that you want to sell it to. There's a lot of market research that goes into understanding what they want in a venture product or how it fits into their broader portfolio. And so you're doing 2 simultaneous market research projects at that same time as you're trying to get this story together.
The big picture here is you need to build your story, right? It needs to be a story built on your various experiences. Dave, as we were talking before this episode, like, it has to be based on like authenticity for you, right? Like, you can't raise a fund if your experiences and your track record aren't tied to what the fund stands for. So it's really like building a story that, builds on your experiences, that builds on your track record, that builds on everything you've been doing for the last 5, 10, 15, 20 years of your life. And that story is what you're going to go out to your friends and kind of test it, right? Don't go out to 100 people at once. Don't go out to 20 people at once. this market research phase is really built for a close circle of individuals that ideally know how to give feedback, right? Like make sure they're, if it's a venture fund, make sure they're in the venture space, make sure they have kind of experience as well to kind of give you strong feedback. But that's the inner circle. That's the small circle you want to create in the beginning to really, test out your story and test out your product.
And how detailed do you see some of these stories being initially? I mean, how much detail about either the market they're investing in or the types of companies they would pick? How detailed do you see some of these people in this market research get at this point? Like,
Yeah, there's different paths, right? So we're speaking generally to a lot of people, but if you're sitting at an existing firm, there's some premeditation usually going on there. You're, doing deals every month, every year. You're building out kind of an investment track record, and you can see the numbers, right? Like these are audited numbers year over year. Like you can see kind of tangibly, what your track record is, and you can have a much better understanding of like, is this going to resonate with, the LPs I would approach. So the other thing there is like, what is the unifying string that ties them all together? Is it fintech? Is it healthcare? You catching these waves, right? These like up and coming waves in technology, over the last 5, 10, 15 years, like every 5 years, you've kind of latched onto a new wave. And now over the next fund cycle, the next 5 years, like you're going to latch onto this new wave, right? Like you're trying to find that like unifying theme. And that becomes part of your story. If you've invested as an angel, right? Not on an existing platform. Like, what is the thing that you've picked? Like, is it founder talent? Is it a certain geographic focus? Is it a certain thematic focus? Is it a certain industry focus? Right. Again, what is the unifying theme in that angel track record? If you don't know, right, if your track record is exceeding benchmarks, again, this is why you kind of create this hypothesis and you go out and kind of test it with, again, a close circle, a trusted circle.
from the finance side of it, one of the things I often see people working through early on is taking these great data sources that are out there like Carta or PitchBook or AngelList that produce information on what's happening in the market today. You want to be an expert in the market dynamics because your LPs want to make sure that you know that if they give you X dollars, that's going to actually mean you can spend 500K in a safe on a pre-seed deal. That'll get you this number of deals. And as you understand the market, these numbers will graduate. Like how you underwrite your portfolio is part of this initial market research. So you can speak as an expert on whatever you're trying to cover because LPs really react well if they know that you're an expert in your space. And that is often one of the differentiators between, in my mind, someone who's just starting the process versus someone who knows how their deals come together, what the sizing is, how to structure the portfolio. Those come together as you do the research, but you need to make sure you're focusing on actually building something that will produce venture returns, and doing exercises like portfolio construction models and simple budgets help you put together all that information, and you can figure out pretty easily what certain services cost, how different deals are underwritten. And so that's a critical part of this market research as well.
I used to think that, similar to pitching a startup, you kind of say like, hey, here's a problem and we've created the solution. I think building a fun product is different a lot of the times. Like you're not just saying like, hey, there's a problem. You can try to frame it that way, right? Like you used to be able to say like, oh, there's this round before the seed round, right? And so you've created like, hey, there's this problem with founders where there isn't a financing, there isn't like a pre-seed financing. Or, hey, there's this round between seed and A, right? Like there's all these great companies that are just a little too early in terms of metrics to kind of get the A round, put together. So we're providing that financing like into those great companies and kind of buying them right a little bit on like the value oriented side. So there used to be like, I think a way to kind of put together your fund product and say like, hey, there's a problem in the market in terms of financing. Therefore, I'm putting this, financing product together, the fund to address that. And that's the solution. I think the market is much bigger now, right? Like the nuances, the different pieces of, tranches of financing, all the way up to IPO. Like there's a lot of capital per tranche. And so I think, it's more about thinking of your product, thinking of your fund product in this research phase as here's my hypothesis for engaging with the best founders, putting capital into those founders, and supporting kind of the story that you've created, right? Supporting it with like your experience, your track record, everything that's going to make your strategy, executable, everything that makes like your team the best team for this strategy. It's really about like figuring out what am I the best at and building a fun product around kind of what you're the best at in terms of access into, next generation technology companies. So a different way of thinking about it, it's not like problem solution. It's more like, here's my hypothesis or my thesis, and here are the supporting pieces, right, to actually build a fun product that will resonate with, again, people that are going to give you capital and lock that capital up for a few years.
Okay, so let's switch gears. Now you've completed market research. You feel very confident in what you think is your superpower, your access into the market, and what you think is compelling to LPs. And you're ready to actually start making some forward movement on getting a name, getting documents together, getting fundraising going. Operationally, what are some of those first steps, or maybe the first people you should reach out to as service providers to help you kind of shape what is next for you?
Yeah, it's a great question, Dave. So the approach here is keep it as simple as possible, right? And I write about this in my book, How to Set Up a Venture Capital Fund. You don't want to stress out here. You don't want to over engineer. You don't want to make this process too complex. Again, keep it simple. The way to approach this, in our view, is to create a list, right? Don't sign contracts, just create a list and again, you can come to us, you can look at kind of the book, How to Set Up a Venture Capital Fund, but a list of the functions and just like write a couple of vendors, service providers, technologies for each of those functions, right? So at least you have a plan, right? And then what you want to do is reach out to probably two, and Dave, love to get your feedback here. But the first is reach out to a law firm, right? And, they can help you kind of do the initial step of setting up, your management company, typically an LLC in the US, but set up like a business. Again, you don't want to over engineer this yet. Like you don't want to create the LPA, the limited partnership agreement, the LPA. You don't want to create the sub docs. You don't want to spend too much money here to start. You want to make sure that the company you're going to create is potentially viable, right? And you want to also kind of align with the law firm that you're going to use for fund formation. But again, you're not, spending too much money here in this initial phase. And then the second thing is, once you've aligned with a law firm, you've kind of, set up your business, your LLC, you start a bank account, right? And now you actually have like a shell of a business that you're ready to kind of, sell your product with. Dave, how would you think about it?
Yeah, absolutely. So first, you can check to pretty easily. You can check on many of the government websites whether your name or the name you want for your firm is even available. And so first, you can do this research fairly cheaply. See if your name's available in the state that you live in. Go and create your IRS EIN letter and get your name kind of taken. Right, you can set that up. Once you have those documents, you go to the bank that you need your operating agreement, your EIN letter, and some photo ID, and you can create a bank account in that entity's name, and then you can get a credit card, right? And that's usually the first kind of operational steps I see at the bank and with your entity, because once you start doing that stuff, guess what? You're going to have to file a tax return and all these other things as you start spending money. You may even put a little bit of money into this business to pay for that first credit card setup, but you're going to have to fund these operations while you're fundraising, while you're trying to figure out these pieces, and you need a mechanism to pay people and then record the transactions because you're going to want to get paid back once you actually close for your legitimate fundraising expenses. And so first step, yep, totally agree, getting the bank account stood up, making sure your name is reserved and you've got that. And then your fund formation attorney, I think what's really important is to schedule a first call, discuss with them what your goals and plans are and what type of LPs you're going to raise from, where you're going to invest. Do you have an anchor already identified and do they have any expectations? And you're going to work towards building more or less a term sheet of your LPA. So not the big full document just yet, but like an initial set of those key provisions where there's some decision making between you and your attorney to think through how you want to go out to the market, right? The other piece that they can help you with is getting a disclosure statement for your fundraising deck, right? So as you start going out and pitching LPs in a more formalized manner with the deck, with scheduled calls, you want to make sure you're following the investment management rules that pertain to how you're doing that. The lawyers can help you figure that out. And so whether you're going for qualified purchasers or accredited investors, or you're using a broader, exemption status, All of that is really helpful to understand before you start, and you want to make sure you get those right disclosures so you stay on the good side of the law. And then after that, you kind of slowly start working out these phone calls, and you can talk to some other service providers to get some ideas of what future costs might be, what their service offerings are. But again, as Winter said, you're not signing contracts just yet. You're trying to make sure you understand what the choices are available to you, and so that you, as you're talking to LPs, can use that informed opinion of, yes, we're going to be audited and we're going to use this firm. You have some understanding of what that actually entails. So I think those are all kind of critical ops pieces. And, you can get that going pretty much as soon as you know what you want to do.
We'll put a pin in the pre-launch ops for now and kind of move to early product development, which is different than market research. Like market research, again, like you're making the decision, you're trying to figure out kind of, is there a product here that I could potentially sell? In the pre-launch ops, right? Like you've set up the business, you got the bank account, you're ready to kind of like actually charge forward and, very much keep track of everything in a very well organized way. Now you actually want to start putting together the early materials, right? So we're going to jump in the next step. It'll be, launch. So you're actually developing kind of like an early data room. But in this pre launch, you're starting to put the story, right? Like the pen to paper. And so this again is an iterative process. But now that you have everything set up, you're going to start more formally reaching out to potential investors, right? And you're going to have again, the shell of a company, like the base of company to actually potentially launch this fund. So putting together, a fundraising deck is part of this pre-launch process. And again, this deck is probably going to change, 100 times, but you want that built based on the preliminary feedback. You're going to include the disclosures from your law firm, everything that kind of goes into this, like that's going to be the first marketing material that you're kind of sharing the story with, right? And sometimes that's something you send out in advance. Sometimes that's you're walking through slide by slide. Sometimes you're not even like bringing that up. You're just having a conversation with people because of your relationship, and then it's kind of a leave behind. But you definitely want that piece of, here is something to react to. And again, in this part, in like the pre-launch, you're looking for feedback, right? Like you're treating the deck in a different way than if like you're 6 or 12 months into fundraise and you're kind of sharing a data room. Like you're not going to get much feedback on like, oh, you should change the slide or you should reorder the story. So this is the part where like you're developing the story and you're putting it to paper and you're kind of getting aligned with like, here is the story and here is the pitch and here's like my foot forward as I go out to market, right? And that, again, that is a closed circle exercise. You're not reaching out to 1,000 LPs yet. You're sticking with like your close circle of trusted advisors and people that are going to help you put together the best story for you and the product you're going to sell in this new company.
And so, Winter, I think one of the things people could be maybe doing really well, or maybe missing the mark on, is identifying those early people that you should actually seek feedback from. Because, if someone's really a good friend of yours, they're going to tell you what you're doing is great and it sounds like an amazing idea. And if, there's always the kind of itch or, oh, well, is this person going to invest in my fund? So how do you kind of advise people on making sure that the feedback they're getting is not necessarily leading them astray, but is actually moving them closer towards getting a commitment from someone?
You think about the sample size, right? Like if you just are back and forthing with one person, then it's going to be very biased to like what that person thinks. So I think the best way to really take feedback in this early market research pre-launch phases is to find people that are actually going to write a check into your fund. Get advice from someone that has indicated they're going to invest into your fund. If they're not going to invest in their fund, they're not, right, like incentivized to give you, a certain type of advice, right? So I think that's a key point. And again, another thing to think about is like, is this LP a reflection of like the LPs I'm going to go out to? So again, are they, a high net worth that has known you for 30 years? Is it like your cousin, right? Like those are probably like, you know, what do they know about venture? And are they giving me accurate advice, in my opinion? Like maybe, but also maybe not, right? Like they just might be betting on you. I think if you're building a product, you kind of want feedback from, oh, this is a friend of mine, like a respected friend, like the respect is mutual. This person has worked, as an allocator to funds for the last 20 years. They've indicated that, they are going to invest through their organization, like, and they're very like excited to do so, they just know what a good fun product looks like, and they're going to give me feedback on, again, like how to actually present this super well. Again, you're probably going to overweight that in terms of feedback than someone that might just be like, oh, well, have you thought about this, or this might work? Like, if they don't have the perspective to kind of know what works and what is sold, again, take it with a grain of salt. The last thing I'll say is, like, again, N of one, like sample size of one, it's going to be harder to kind of build, right? I think a consensus perspective of like, oh yeah, for my story, this is the best deck. This is the best story. So try to create a, you know, early inner circle of 5, 10, 15 people. Ideally, most of them know like their experience and kind of know what a good fun product looks like what a saleable fun product looks like, and can give you feedback on that development process, right? But again, like, these are people that want you to be successful. Ideally, they want to invest into your fund, and they've indicated they're going to invest in your fund. You don't have a fund set up, so they can't actually do that yet, but they've kind of indicated that. And I think that's the inner circle exercise that you really want to go through before, again, launching to the wider market.
Yeah, and I see it with the funds that go through Coolwater that I engage with. You can tell there's the decks, the storyline, it gets much crisper and more clear, more clearly defined of how this fund is going to take advantage of an opportunity in the marketplace and how it will return money and why this investor is the right person at this right time or right team at this right time. And so you can see these decks evolve over time as it gets more and more crystal clear. And it's definitely not something you build alone. You build it with other people to make sure that you're kind of working towards that clarity. So it makes a lot of sense.
Last part of the pre-launch phase, something we'd recommend is, setting up a CRM. So you're starting to reach out to, like we said, let's say 10, 15 people. How are you keeping track of these conversations? It's easy in the beginning because you're talking to a few people, but once you actually launch, which is the last thing we'll talk about today, you now need to, keep track of dozens or more people per week. And so, you know, creating that last kind of infrastructure piece to kind of keep track of your fundraising process with the CRM, really important step.
And I'm sure that's something I'll cover quite a bit in Coolwater. So setting up CRM seems, like a daunting task for those who may not have had a lot of sales experience before, but there is a way to do this. And you build a funnel, you identify the different ways you're going to engage with people. Lots of us have done this before. So there's a lot of great ways to get advice on how to set up your CRM. But it is ultimately up to you to make sure you populate it with names that will convert. And that is always the hard part. All right. So switching from CRM into the initial launch phase. So you've got your deck in place, you've got some, form of a process, you've got a CRM, a list of names. What are the other pieces that you need to have ready at that launch when you're moving from friendly conversations helping you to now I'm in business and I'm trying to get fundraising closed and working towards that first close?
Big picture to small details. You've figured out your initial fund product, right? Like, you feel very confident. You've talked to your 5, 10, 15 friends and advisors. Like, you feel there's a good consensus of like your background authentically tied to the fund product you're going to sell. All that feels like it's, meshing, and it's working well. So you're ready to launch. You've got the product, you've got the shell of the business, you got your bank account, you got your credit card, you paid for your CRM. Now you're ready to kind of go out and start talking to more LPs. This is launch, right? Like, you've kind of gotten to the point, you made that decision, you're focused, right? You've prepared expectations. This isn't probably going to take weeks, it's probably going to take months or even years. So you've like done all the right things, and now you're ready to launch. And there's a few things that you probably also want in place before you just launch. Because if you launch at like right after the pre-launch, then it's just like people are like, I love it. This is the best thing ever. Can I buy it today? And you're like, well, actually, we don't have the LPA in place. We don't have the sub docs. We don't have more materials to share. We just have this like deck. There's probably an interim step there, right? We call it launch, but it's, between pre-launch and when an LP is like, we love it. Can we see more? Or we love it. We want to invest. And that's kind of where you want to actually have some additional materials in a preliminary data room. We're not going to go into the meat of that because we're going to save that for one of our future episodes in this series. But you want to create this simple data room that has a few things that can be shared with LPs so that they can move through their process to get to a yes decision.
I would say the best fund managers that I've had the pleasure to work with, they are when they're going out to fundraise, their documents are free of typos. The numbers are what they expect them to be. They've got all of their T's crossed and their I's dotted. They have their organizational documents. They've got all these things ready to go. They're not building them as an LP requests it, but they're built with intention up front and is run like a very professional, highly polished sales process. And you want to try to manifest your enterprise salesperson because that's ultimately what fundraising is.
That concludes this week's episode, and we're going to switch over to Did You See for the week?
And Winter, you and I were just talking a little bit ago about a recent sidecar article that we read related to SPV management fees, and I think it brings up some good points that I've definitely experienced, with managers and in conversations about the best ways to set up SPVs as a strategy, the way to use it to support your main fund strategy and take on follow-on opportunities, and as a co-investment platform for your larger LPs who want more direct access towards companies. And so there was a lot of great information in this. And I'm just curious, having read through it together, what are some of the problems that you see, early managers in their development, working through with SPVs, whether it's management fees, whether it's expenses, how have you kind of seen managers handle it differently?
Yeah. I think the reason to talk about this in this series is because you're launching a fund, and it used to be you would use an SPV to follow on into a company. And now SPVs are sometimes used before you even launch your fund, right? Or they're used in parallel of launching your fund. So it's definitely, a topic du jour. The things to kind of think about, right, are, what's your ultimate goal here? Like, are you running SPVs? Is that your strategy? Or are you trying to launch a fund? And if you're trying to launch a fund, like, how do SPVs actually support that effort? And there's certain things to think about, right? Like, maybe you can use the SPV to continue building out your track record, right? That's going to be a future episode. Continue building out your track record. And so people can see you in the market. They can see your, taste for a certain type of deal. They can see that you're actually getting deals done even before the fund launches, right? So it can be used as a tool to help you in that kind of, launching time frame for launching your fund. Um, but the things to kind of think about are, you know, do you want to do this? Again, there's a decision there of like, I'm going to do SPVs because it's another thing to manage. The question is like, if I'm going to do it, is it aligned with, again, this whole story you just created around like, who am I as a fund manager? What am I actually raising for? Are the SPVs you're doing, do they support that fund launch or do they detract from it? Right. And that's a question that only, you respectively can answer. And then there's also a piece around the economics of it, right? Where it's like, if you're an LP in the fund, right, maybe you charge lower fees. That's very common. Then if you're not in the fund yet, maybe you charge higher fees, right? So it can almost be a carrot to get people into the fund, especially if it's an attractive enough company. And yeah, the sidecar article kind of goes into, market fees, what are people charging, how to think about, upfront fees versus annual fees, and kind of like what are benchmarks for, the current market.
Yeah, you definitely don't want to launch an SPV and not have thought through how you're going to pay for it, how long you think it might be around for, and then have some instance where you go back to the investors in that SPV and say, "Hey, I actually need an additional capital commitment to pay for our taxes or audit preparation or whatever it is." Or conversely, have that come out of your management company and then wait, until you can ultimately get repaid for that. So yeah, there's a lot of great information, and if you're running SPVs, I would highly recommend you check it out.
Cool. All right. Thanks, everyone. We'll see you next week.